And we are rolling. Here we are. We are with Howard and Ed, our two product leads. Yes, the two people who run product for the entire bank. We are graced with their presence, and they both have mustaches. Maybe we shouldn't go into that too much.
It's important to have a brand identity.
If any other product manager is looking to join Griffin, you don't need a mustache, just to let you know. But yeah, anyway, why don't we talk about 2025 and specifically for the product team at Griffin? Um, who wants to start with like a quick overview about how would you say product went at Griffin last year? How was 2025?
I think 2025 was a big year of growing up for us. It was a big year of growing up for Griffin in general. But we started to see customers really using the platform at scale. We also started to see customers using the platform in a lot of different ways. I think in sort of 2024, we had our first sort of 6 months of live customer activity, but it was low volume. A few of our customers were really confined to sort of one or two sectors. We were primarily in property and wealth. We're now in sort of 5 to 10 verticals, depending on how granular you want to be define it, and we are at sort of 5x the volume that we were a year previous, and that brings with it a lot of challenges, also a lot of opportunity to learn and work with customers. But I think we've really been stretched in how we think about customers can use the platform.
Yeah, and I think at the start of the year, we also had a downsizing of our team, and we still managed to deliver a huge amount this year. So I think when looking back on last year, we delivered something like 10 major features out to our customers. And like our job is to deliver features that customers love and support the business in meeting its objectives by delivering that capability. And that's just the stuff we deliver to our customers. Like we also did a lot of work and built features for our internal teams to support operations. So I think it was really impressive that we managed to do that downsizing, but still keep such incredible velocity and quality in the product itself. So yeah, and I think like looking back at those features, embedded bank accounts, chaps inbound was something we delivered. We expanded to onboarding individuals outside of the UK. We delivered search capability to customers, improved internal book transfers. We increased our data model to improve like how lifecycle management happens with legal persons, created new roles for the platform. We improved some security with how we sign messages and signed webhooks and our API message signing. And then I think like one of the random ones we did were actually what proved to be like a real eye catcher for a lot of people in industry was developing the Griffin MCP, but like you kind of know more about that than we do at this point. So yeah, pretty amazing year considering team size, like the things that we delivered and the quality that we managed to output.
Very cool. It is an interesting point how like there are customer facing features which obviously are like super super important and what we focus on, but there's also a lot of things kind of happening behind the scenes, should I say, that kind of keep the bank running and and are in some ways equally as important. And yeah, maybe we don't talk about them enough publicly. I don't know, but if anyone's listening and so interested in how like product works at a bank, there's a siren. Of course, there's a siren whilst I'm recording a podcast. But there are features that maybe we don't talk about as much. But both of you and the engineering teams like work on to keep everything running smoothly.
I think in many ways that's the hardest part of Ed and I's job
Right.
is balancing. It would be so easy for us to say customer features are all that matters. If there's an API that a customer calls or a new button in our customer app, then that's important and everything else isn't important. And obviously we know that's not true. one reason being that if the bank falls over, guess what? We don't have a product anymore. But also, actually, improving our internal processes does indirectly improve the experience for customers. So one of the big things that we did on the banking side last year was developing bank product foundations, which, whilst that was really an internal re-architecting, added a lot of configurability and flexibility into our platform for customers. But it also freed up a lot of our commercial team and our operation teams and our engineering team's time, which, guess what? That means they get to work on other things. That means our overall customer experience gets better because our teams are less stretched. I think within Ed's world, that's also true. If we make our onboarding process more efficient, our ops colleagues then can be more responsive to the requests that do still require manual intervention. So internal improvements also improve the customer experience, even if it's in a less direct way.
That's such a good point, how we use technology to kind of gain leverage, make things more efficient, and automate and help our people focus on the real people side of things, as opposed to just throwing people at problems that don't necessarily need it. Ed, what would you say is the hardest thing you and your team worked on last year? And why?
Yeah, I think it wasn't actually a customer facing feature. It was one of those internal pieces which really helps us know our business. And that was, we made a really large leap in our management information capability. So, I mean, if management information isn't like a natural term for you, it's basically just a broad set of metrics that we use to monitor the performance of the bank and monitor some of the risks that we naturally hold as a bank. And it was a complex piece of work, mostly because it touches every aspect of the business. So there's a huge amount of engagement that is needed to agree on, what we're tracking currently, and are we tracking that correctly? Like, do we have the calculations right for this metric? It's also making sure that because it touches every domain, like every single domain has a really big stake in like wanting to get what they need out of that project as well. And it's one of those things that can just become a forever project. So it was just really hard from an understanding perspective, and also making sure we delivered what was needed. And yeah, I think the team just did phenomenally well and kind of basically orchestrating that piece of work. And the outcome that we get from that is that if we've got better observability on how our products are being used, how how are our deposits increasing, where are they increasing, are we onboarding customers, like what's the customer growth like, where are we getting that growth, which customers are driving it, which products do they then go to, we can start to make better decisions around the type of like product prioritization work that we do. Like, should we invest more in like how we're developing embedded bank accounts and the features that we have there, or should we focus more on savings accounts or our pooled account offering? So that type of improved observability of just the general bank, its performance and how it's operating, I think was very, very hard, but one of the best things that we did last year.
Yeah, no, that makes sense. Howard, how about you? What did you find most difficult?
I've already mentioned it briefly, but the Bank Product Foundations work, again, an internal initiative that we've now started surfacing more directly to customers. I think similar to what Ed was saying, the reason this was difficult was because bank accounts kind of touch everything at Griffin, and changing some of the fundamentals of how that works has both intended and unintended consequences all across our platform, that we are still in the process of sort of decommissioning old logic and retiring old ways of doing things as and when they come up. That said, it was absolutely worth it because customers now have a lot more flexibility with how their different bank accounts operate. So that also sets us up really nicely for this year, where a big focus on the banking side is going to be adding more configurability and more configuration options. Adding notice periods, adding term, adding more variability about interest, which I'll talk more about later. All of those things are enabled by having a framework for configuring bank account behavior.
Like, it sounds like a really kind of long-term like bet that it will have It's like, yeah, a foundational piece of work that will have an impact across multiple product features for years, by the sounds of it. Yeah.
And I think
Yeah.
it speaks to the difference between Griffin and a typical bank. So again, if you want some insight into what working in the product team here looks like versus at any other sort of high street bank, we think about ourselves as a platform for banking. So we're not really interested in building individual bank account products for individual purposes. We're interested in building tools and frameworks and processes for our customers to build financial products for their customers, right? We have this embedded model, this B2B to B or B2B to C model. In some cases, I think we're in like a B2B to B to B to B model, and which one of those Bs we are isn't always obvious. But it's really important that we think more systemically about what we offer to customers. And so I'm not interested in building, okay, we've built this savings product and now we're building that savings product and now we're building this savings product. It's more, can we build a savings configuration tool such that the customer can configure the product the way they want? If we built something bespoke for everyone, we'd be here forever building individual things. That's not a scalable model. And so we're scalable not just in our technology, but also in our ways of thinking.
That I guess also makes it difficult, which is why these things that you said are hard. That is why they're difficult.
That's also the fun part.
Yeah.
Just to tack onto that,
I think go for it.
Just tack on. I think what that work that Howard's talking about, the Bank Product Foundation, it was also a really good sign of our business maturity. We're a startup and we're building very specifically to hit certain revenue milestones, and I think and we've done that really well. All of our teams work very, very hard to deliver what we need to generate revenue, to improve our margins. But I think the Bank Product Foundation's work was like a really good case of us getting to a mature point when we go, okay, hold on, like we're getting to a point now where we really need to think about something which is extremely scalable for all the different types of requests that all the different types of customers are going to give us. So that whole moving from let's build a specific account style product to let's build a account configuration tool, I think was a really good demonstration of how the business matured in 2025 versus 2024.
Yeah, no, that makes sense. We've mentioned this idea of configurability and this B2B to how many Bs you want model. I'm guessing that makes it really hard to predict exactly what one of our customers wants. And like you said, Howard, it's our job to build the platform to be able to support different things. Have you seen, obviously, you're both working super closely with customers. Have there been any examples of where a customer, we don't need to mention who exactly, but a customer has been using our product in a way that we didn't quite imagine? They've used the bits of the platform in a way or a combination that we just didn't predict.
Yeah, I mean, it's so at the moment, one of the big value adds of working with Griffin is we help our customers kind of do solution design and understand how they best work with our platform. So Ed and I tend to get roped into quite a lot of conversations about how customers use the platform. So certainly once they go live, typically things are not surprising at that point, but we've definitely had a few early stage conversations where you're going to go, that's quite interesting. We have had one customer that's gone live, and I think this speaks to what Ed was talking about MI. We've had one customer go live where their volumes for internal transfers are just way higher than we expected. And the reason for that has ended up being that they're doing sort of what we expected to be batch transfers, they're doing on an individual basis. The advantage of our platform is because individual transfers are really easy to do, they're very cheap to do. That gives our customer much better sort of reconciliation and traceability of those individual disbursements out to their sort of end customers and employees, etc. I think this speaks to what Ed was saying about MI. because that's immediately created an interesting sort of, good problem to have for us, which is we can see the volumes starting to go up and up and up. We know this customer is expecting to grow really rapidly this year. That's going to create some interesting scaling challenges for us. But if we've got the right MI in place to detect it early, we can prioritize the necessary scaling work to continue to support them as well as all of our other customers.
Super interesting. And I guess that's kind of the nature of API first banking, is like you can make those individual transfers like super easily programmatically. But yeah, the consequence is scale, and that's what we're here to support, I guess. We can't talk product without talking trade-offs, and I guess 2025 was like the first kind of full year where we were both a bank and a full year of like being live. Were there any like specific trade-offs that kind of stuck in your brain from last year that you had to make and you and your teams had to like really sit through and consider?
That there were, but I think there was, from the sum total of all of those, I think there was basically just a theme that came out. And David posted on Slack last week about the goals that we set at the start of 2025 and whether we hit them or missed them, and kind of like what the learnings were. And I think the theme that we had was that I think the biggest trade-off was we were working out like what is that balance between like build the bank versus run the bank. Like building the bank is all about expanding our market, increasing our product range, enabling us to serve a wider set of customers. And then running the bank is like actually making sure that all those operational processes and the platform itself are kind of like running very, very smoothly, regardless of what demand we put on it to manage the existing capability. And I think at the start of 2025, as you do, you're very optimistic about what we think we're going to build from an expansion point of view. And I think over the course of the year, what we learned is that from a prioritization point of view, we had to really start thinking more about that run work. And, we're relatively new. We launched in 2024. And so we're still going through a couple of those first cycles where we have to run a bunch of processes, which are either, annual or quarterly. And as we get used to that, that work probably comes slightly less and slightly less complex because we're, making improvements year on year. But I think last year, because we did get that first like big demand of like volume from customers, from payments, from deposits, it kind of really stress tested how much time we should focus on that maintenance. And, we're regulated. We can't fall over. There are real penalties for that, like real penalties for that. And we also, we need to make sure the error margin, we can't be like, oh, we'll fall over at, 5 million payments a week. It's like, okay, and we're at 4.5. It's like, well, no. Like the error margin needs to be way thicker than that. So yeah, I think, and just the most responsible thing that we can do and the most responsible product decision you can make is just making sure that our platform is reliable, our ops processes are running smoothly so we can stand up the bank that we've got today. So like there are specific examples, but the sum of it, as mentioned, like is really that, how much do we build versus how much do we run? And that was interesting. We had to work out how best to bring that into our prioritization thinking from a product perspective. How do we what do we want to track, or like what's the value that we're going to put on, improving the error bar that we have for this thing potentially falling over. Like so that was a learning for us as well, and something that's obviously just going to mature over time.
That's super interesting. I guess it was in a way a transition year from like just launching to scaling properly, putting real volume through things, and not, like you say, testing processes for the first time. I mean, testing is the wrong word. We already tested them, but yeah, putting processes through at their paces properly for the first time. Any features that are coming soon that you're particularly excited about that we can give people a tiny little preview?
Yes. So speaking of kind of the need to sort of balance, build, and run, there's something we've been working on for, well, the latter half of last year, which is coming very soon. I think, you know, one of our challenges now is, as we are a more mature business, the quality bar for what we release only goes up. You know, we very much try and take a sort of startup approach, right, and ship an MVP, a minimum viable product. But the viable, or the minimum viable part of that, is evolving as our customers' expectation of us are evolving. If any of our kind of early customers are listening, you'll remember quite how janky some parts of the platform were during very, very early months, and the level of polish has, you know, hopefully you've seen that go up. We now have to meet that level of polish with everything we launch. And so new things take a little bit longer. The thing that the payments team have been working on is BACS, direct credits and direct debits. So adding a new payment scheme to our suite. We added CHAPS last year. We're adding BACS this year. This is huge for us because it enables both salary payments in. A lot of firms still pay salaries via direct credit. And it also allows customers to pay recurring bills via direct debit, both of which are huge enablers for more of a current account type proposition. And we see a number of sort of neobanks or alternative kind of daily banking type providers wanting to work with us, offering a more holistic current account proposition that competes with the high street. And direct debits and direct credits are a huge building block as part of that. So really excited. Direct credits coming out any day now for general release. Direct debits a couple of months away. And we'll be starting to work on a more holistic current account offering with a few customers following that.
Wicked. I think I even owe you some comms on direct credits.
I didn't want to jump you in it, but yes.
Apologies to all about that. That's my fault. Moving swiftly on away from that topic, one problem that you're particularly excited about solving this year. If you think about each of your respective roadmaps, what's one thing that you're really, really excited about solving?
Yeah, for onboarding specifically, there's actually two things that are very tightly coupled. So the first one is we want to start being able to provide the reasons for which customers have declined an application as a API response. And we also want to support the automation of our reach out requests by basically improving the data that we provide back when an onboarding application is put into some kind of manual review. Like, you know, sometimes you have to ask for a source of wealth or source of funds or proof of address, for example. And at the moment, those two things we don't do programmatically. And I think they kind of seem small, but we're an API first bank, and they're kind of the last two things that exist in onboarding which are actually quite manual. And so removing those is not only going to, you know, answer a direct customer feedback that we've had pretty consistently, but it's also essentially going to enable our customers to programmatically manage requests that they get from their own customers and requests that we put onto them. So taking out that human element. And so we're going to see a bunch of metrics improve, you know, on that, like time to onboard, like time that a manual intervention is required. And it's kind of a win-win for our customers. Like, we first were like, we should automate this. We're getting a lot of requests in, and our customers were like, can you please tell us the reasons and automate this request so we don't have to ask you? And it's just this massive win-win. Like, we don't want our ops team asking questions which are literally log into our operations system and just check the status of something. Like, that is a bad use of someone's time. And so the win for us is that we don't have to handle the request. The win for our customers is that they can self-serve. That lowers the cost of operations for everyone, and also means that we get to final outcomes on onboarding applications quicker, which is if they're going to be accepted as a revenue accelerator, and if it's a decline, just means that we're not kind of pursuing something which isn't actually going to end up in the revenue generating activity. So I think it's a small thing, it's a big pain point, but I guess the main thing is it's going to rip out the last two manual processes that we actually have within the onboarding space. So that's super exciting, because we work very hard to basically straight through process, like only have a system decision on our onboarding, but it's impossible to get that to zero. So we've got quite good metrics on that. So taking those last two things out, I think is just going to really make that whole onboarding capability as itself completely API first and actually run really efficiently.
I think, yeah, you and the team did some incredible work last year on getting those like stats up, whilst obviously making sure that things were that the checks were running properly, and obviously yeah, making sure our customers and we're protected. Ed, sorry, Howard, how about you? What's one thing you're really looking forward to getting stuck into this year?
At the risk of sounding like I'm repeating myself, it's configurability. But this time it's interest rates. So we've made a lot of progress in providing a framework for how bank accounts work, but how interest rates work in our platform at the moment is there's a lot of extensibility to provide that configurability. We built that in from the beginning, but currently interest rates are a pretty simple concept, right? We give you an interest rate, we pay that interest monthly. Nearly every customer we've talked to has wanted some degree of configurability. They want to see how much interest that they've accrued on a bank account in real time. They want the ability to pay interest daily rather than monthly. That's a really common one. We internally, our ops colleagues, want to have tracker rates be automatic based on bank rate rather than set individually. We want to add term deposits and sort of fixed interest rates where currently we don't have those. We want to add top-up rates beyond bank rates so customers can choose to pay their customers a higher introductory interest rate, and we'll automatically bill them the difference. There's a lot to do there. Again, it's all about providing sort of levers that we can pull with our customers rather than building a bunch of specific bespoke products. But I'm really excited for what we can do with interest rates this year to expand the scope of the proposition. I think where Ed's focused on optimization in a more sort of mature part of our business, I'm really focused on expanding the offering that we've got for customers in a part that is still a little bit less mature.
Very cool. I can see how that can be super powerful. I was just recording with David, our CEO, earlier, and we were talking about the kind of new spaces that the product teams that you folks are entering into, stablecoins, agentic banking. What do you both feel about that? Is there any particular area that you're specifically excited about out of those three?
It's always really fun when your boss says, let's add 3 new product lines. Yeah. And massively multiply all the other metrics that we're following for our existing capability. It's good. It's good to set ambition. I think this. I don't know if it's different for Howard. I think the stablecoin one I think is genuinely really exciting. The rate of growth on stablecoin utilization has been absolutely ridiculous. I was looking at the IMF site, and they've got it as tripling since 2023. It's 23 trillion in 2024 of movement, which is just is absolutely unreal. So I think that is just exciting from just a pure growth opportunity. We also work with a lot of remittance firms, and there's quite a nice pairing there for cross-border payments. So there's a really nice value add for remittance firms with cross-border payments and kind of hopefully making that cheaper and more round the clock. So yeah, I think that's quite exciting that there's like a genuine value add for our existing base. It's not just something we're going to try and tack on and like see like what might stick in market. And I think like this, but the scary side is, it's
it's going to require us to get used to across and accustomed to like a whole set of different regulations to managing it. And while there's a lot of overlap of with things like MiCA and the Genius Act, and they overlap with things like the things that we have to adhere to already, with like the Financial Services and Market Acts, like PSRs, AML regs and stuff. They are new. We got to get across them. We got to get accustomed to them. We got to really understand the risks. We've got to mitigate all of those risks, which means probably some additional controls. It might mean working with new suppliers, which means new vendors that we got to get due diligence through and stuff. So there is an absolute behemoth amount of work to get that done. But yeah, it is just super exciting because there is so much growth and adoption of stablecoins at the moment. So yeah, be interesting to see where we are at the end of the year, like whether or not we've launched or whether we're close to. I think that's going to be I think that will be a really big indicator of, whether we manage to pull something quite big off.
I think it's also an interesting question for us in stablecoins, which is the killer use case for stablecoins right now is remittances and cross-border payments. And it's a question for us as a business, and we don't have the answer yet, as to whether stablecoins is the beginning of our cross-border payments world, or whether stablecoins is the beginning of our crypto offering, right? We can kind of go in one direction with that. We can potentially even go in both. But obviously there's a huge market in crypto generally, and stable is a great way for us to kind of start to engage with that. We've always been pretty cautious about crypto as an industry. But it's also, the route to cross-border payments. And at some point we'll need to have other cross-border payments rails in place as well. But it's a great place for us to start. If I just talk about agentic banking for a second, I think that speaks really strongly, right, to our core value proposition at Griffin. Like, managing money at scale programmatically is exactly sort of where agentic finance fits in. It also really fits nicely with our API first model, right? We are designed, not even deliberately, right? We are designed sort of by happy accident to be great for agents to interact with by default. I think the big thing this year is going to be, how do we engage with the protocols? So A2P and others. Last year, Mo, you did some work on RMCP and starting to look at how agents interact with us. Doing that without these kinds of protocols in place creates complexity for customers, because they have to build the rule set for themselves for how do I want this agent to interact with the bank. With these protocols in place, that effectively is almost like an SDK for how does a customer's AI interact with the bank. And so I think we'll start to see huge appetite for customer adoption if these protocols can really take off, because suddenly the agent rule set is de-risked by the protocol. And so I think we'll see a lot of interest there, and Griffin's well placed to get more involved.
Yeah, there is so much going on. These are like huge things that we, like, I think Ed and Howard, you both said, like, we already have customers kind of like doing things in these spaces. But even then, like, both of these things that we've spoken about are like huge areas in their own right, and it's so exciting to be involved in this. I think we can wrap it up there. I think you both have enough work on your plate, and I think Ed, you volunteered for another podcast at the end of this year to see where we're at with these initiatives. Yeah, Ed, Howard, massive thank you to both of you. Super exciting to see all of the stuff being built. And yeah, I'm sure we'll have you both on soon again. So yeah, thank you very much.
Thanks, Mo. It's going to be a huge year. Plenty to talk about.